Welcome to Tony Byrne's View, with news you can use. As a chartered financial planner and wealth manager, Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
End of year tax planning 2022 to 2023. As the tax year comes to an end, it's crucial to start thinking about your tax planning strategies. With the new tax year starting on April the 6th, 2023, there are a few things you can do to ensure that you're taking advantage of all the tax benefits available to you. In this podcast, we'll cover some key tips to help you with end-of-year tax planning in the UK for 2022 to 2023. 1. Maximise your ISA allowance. Individual savings accounts, or ISAs, are a tax-efficient way of saving money. You can save up to £20,000 tax-free in the 2022 to 2023 tax year, and the deadline for contributions is April the 5th, 2023. If you haven't used your allowance for this tax year, consider contributing before the deadline to maximise your tax-free savings. 2. Make pension contributions. Pension contributions are another tax-efficient way to save money. You can contribute up to 100% of your income, or £40,000, whichever is lower. You may also contribute up to £3,600, even if you have no relevant UK earnings. If you're a higher earner, you may be subject to a reduced annual allowance. You can also carry forward unused allowances from the previous 3 tax years if available, subject to your contributions not exceeding your net relevant earnings in the current tax year. Making pension contributions can help reduce your taxable income, which could result in lower tax liabilities. This is particularly beneficial for higher rate and additional rate taxpayers, and in light of the reduction in the higher rate tax band from £150,000 to £125,000 next tax year. 3. Utilise your capital gains tax exemption. If you've made gains from selling assets such as shares or property, you may be subject to capital gains tax, or CGT. However, you can make use of your CGT exemption to reduce your tax liability. The CGT allowance for the 2022 to 2023 tax year is £12,300 per person. Next tax year, it reduces to £6,000 and the following year to £3,000. So if you want to maximise your CGT exemption, then consider using it before 6th of April. Remember, individuals each have an exemption. This is especially useful if you wish to gift assets from one spouse to another before selling them, because this can potentially double your tax-free allowance from £12,300 to £24,600. Worth considering. If you have unrealised gains that exceed your allowance, consider selling some assets before the end of the tax year to utilise your allowance in full. 4. Consider tax-efficient investments. Investments such as venture capital trusts, or VCTs, and enterprise investment schemes, EISs, offer tax relief for investors. VCTs allow you to invest up to £200,000 and receive 30% income tax relief, as well as tax-free dividends. EISs offer 30% income tax relief on investments of up to £1 million. It is free of inheritance tax after 2 years, and it can be used to defer, reduce, and potentially eliminate capital gains tax on other assets. EIS contributions can potentially be carried back to a previous tax year, but only if the HMRC EIS tax approval certification is received before 5th of April. However, these investments come with higher risks than traditional investments, so it is important to seek professional advice before investing. 5. Take advantage of gift aid. If you're a UK taxpayer, you can make charitable donations through gift aid, which allows charities to claim an extra 25% on your donation. This means for every £1 you donate, the charity receives £1.25, and you can claim back the additional 25% as tax relief. To claim gift aid, you must have paid enough tax to cover the amount the charity will claim. Interestingly, you can carry back charitable donations to the previous tax year, which may be worth considering if you were subject to a higher rate of tax last year, but not this year. In conclusion, end-of-year tax planning is crucial to ensure you're taking advantage of all the tax benefits available to you. Maximising your ISA allowance, making pension contributions, utilising your capital gains tax allowance, considering tax-efficient investments, and taking advantage of gift aid are all effective tax planning strategies to reduce your tax liability. It's important to seek professional advice to ensure that your tax planning strategies are appropriate for your individual circumstances. With careful planning and execution, you can optimise your tax position and save money in the long run. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.